G'day folks, welcome back to Pete's Investing. It's October 17, 2023. This is the nat gas price update. You can see here we've got our weekly, daily and hourly charts, and I'll drill down to each of these. So looking at the weekly, we want to make sure the weekly and the daily are in alignment before we trade on the hourly. So you can see here our CCI 150 is broken above its moving average, although it's still in the oversold territory and making some advancement to the upside. Now it's currently reached that 23% level of that Fibonacci range. So that's a slight positive, although it's taken a bit of a retrace to the downside in the short term. So let's look at the daily, a bit more detail. We did have again, the same Fibonacci level. We did break above, we had a resistance here previously, which we've raised that resistance since, and it broke above our resistance area and it hit this target area. This was a target drawn previously between that 2338 Fibonacci level. So it hit the target quite nicely, and it's hit this new resistance here at 35.85, and it's making again a retrace to the downside. You'll notice the CCI 150 is still in an uptrend, although it's again pulling back, and the CCI 400 down here, which is our trend indicator, is also in an upswing. Now the difference between these two CCIs, for those new to the channel, this is our trend indicator primarily, and we look at this one for any divergence primarily, so that's our divergence indicator. On the hourly chart, you can see here we've got a smaller Fibonacci range. It's actually pulled back, and that's where we drew this divergence. You can see there's divergence there. It pulled back, hit our target in that 23-38% level, and it's fallen right down now to and resting on that 38% level. It's actually bounced off that 38% level. Now you'll notice on the trend indicator down here, it's still trending pretty strongly down with a very minor retrace, but again still overall a pretty strong downtrend, and it's approaching the zero line. It's already broken through the zero on the CCI 150, and again no sign of a divergence yet, and they're both still trending down. So at the moment I wouldn't be going long. Ideally we want to see going long on the hourly when both the weekly and the daily are in a long bullish momentum, as you can see. So if we had drawn it back here, for example, where you can see there where it's gone and broken above the zero line here, there was more bullish movement to the upside, and that's where you would have liked to have gone in alignment with the weekly and the daily. At the moment it's trending short, so I wouldn't be shorting it at the moment until we see a bit more of a bounce and this moving average break to the upside. So that's where we are in the short term. Avoid, you would have been nice to take profits when you saw this divergence as well. That's another reason for these divergences. So when you're going long in this case, you would have taken your profits and gotten out of the trade. Hopefully you've taken that advice. Again, just looking at primarily trading with a trend and taking your profits when divergence shows you that. So if you got value out of the video, hit the subscribe and the like button, hit that notification bell. Thanks for watching, and see you in the next video.